Living for Giving, very good name. They say, howdy Jake, LLC, Carbon One, onboarded with DWP. Awesome, dude. Okay, so we get price appreciation, 3 to 4 digits. Cool. Sell small percentage of bag to pay debts and fund bucks. Okay. What's next? How to properly transfer to another LLC for real estate investing or personal use? Thank you. So, to be able to qualify for the S Corp election on your LLC, you need to pay yourself a reasonable salary in the eyes of the IRS. That's somewhere between $50,000 to $70,000 a year. Based on my conversations with other CPAs, again, I'm not a CPA. So you'd have to pay the W-2 or the employee self-employment tax on that. So Medicare, Medicaid, Social Security, all that stuff, it's an extra 13.5% on that $50,000 to $70,000 that you'd be taking out. The rest of that could flow through as dividends to you because it's a pass-through entity anyway. If you're going to take that money out, you can either have that LLC that owns the digital assets own another LLC that owns a property or something else, or you can pass that to your person, take it out as a dividend, and then invest it in a property in another LLC, and then use cost segregation analysis in order to be able to offset some of that income in the first year, somewhere between 70 and 75%, if it's an investment property. If it is, a residential property that you're going to live in, you're not going to have those advantages. But if you're going to use the money for personal use, I would try to spend it out of the corporation if you can before moving it to your personal account. You want to maintain that corporate veil between your LLC and your personal accounts. And what do I mean by that? Well, if you're going to subscribe to any publications or any investor newsletters, or you're going to attend any investor conferences, or you're going to travel to go meet with other people to talk about investments, or go to have dinner with people or lunch with people to talk about investments, network with other people, participate in a mastermind, all those things are tax deductions if you've spent that money out of the company. If you have an extra vehicle, let's say you went to go buy another vehicle that you want to drive around to do business, go look at properties and meet with people that were talking about or discussing investments, then that's okay, as long as you have a separate vehicle that's your personal vehicle, and then you have the vehicle that you bought specifically for your business, and you're documenting the miles on that and doing all the stuff your CPA tells you to do, then you can write that off.